Okay, so let us start discussion on Unit 5 of our daily university course, and let us cover Unit 5 today. So my first topic of discussion is taxability of e-commerce. If you can see your Unit 5, the first topic is taxability of e-commerce. This topic has already been covered by me in my regular classes. E-commerce, now to cover this topic now, you need to refer three sections: Section 9, subsection 5 of CGST Act, Section 5, subsection 5 of IGST Act, and Section 52 of CGST Act. If you read these three sections, your topic of e-commerce is complete. If you remember, what is Section 9, subsection 5 of CGST Act? If you remember Section 9 of CGST Act, the heading is Levy and Collection of CGST. Section 9, subsection 5 deals with e-commerce levy and collection. 5 subsection 5 is also one and the same thing, just like 9 subsection 5. The only difference is section 9 was for intrastate sales and this 5.5 is for interstate sales. And section 52, as far as section 52 is concerned, it is tax collection at source. So tax collection at source by electronic commerce operators. So taxability of e-commerce topic has already been covered by me. Three sections we have to do: section 9 subsection 5 of CGST, section 5 subsection 5 of IGST, and section 52 of CGST. Combination of these three sections covers your entire topic of e-commerce. So from my side, e-commerce is complete. So I am proceeding to the next topic, which is given in Unit 5 of our course. Now next topic is anti-profiteering. Next topic is anti-profiteering. So let us discuss this topic, anti-profiteering. Section 171 of the CGST Act deals with this anti-profiteering. Let me show you the original CGST Act. Let me share one screen with you. Can you see the screen? I hope you can see the screen. It is section 171 and the name is anti-profiteering measure. Section 171, it deals with my topic, anti-profiteering measure. I hope you can see the screen. It is original CGST Act 2017 and the powers of this anti-profiteering measures have been given under section 171 of the CGST Act. So let me discuss now this section with you in detail with the help of my simplified language. So let me share with you another screen. I hope you can see this new screen. Is this new screen visible, which is in Word format? Okay, so it's visible. So this is my anti-profiteering measure. This is the topic, one topic. So we are covering basically section 171, anti-profiteering measure. Now, when initially GST was implemented, government expected that because of removing cascading effects of taxation, because now there will be only one tax, GST. So there will be removal of duplication of various taxes. Because of this, the prices of the products will fall in the hands of the company, and obviously because of this, the final price will also fall. Tax is also a part of cost. So when taxes fall, indirectly cost falls. When cost falls, selling price falls. So government expected that because of GST, there will be reduction in, there should be reduction in the prices of the products. Why? Because either as a producer, my tax rate will fall, or I will be now allowed after GST to claim more input tax credit, which earlier might not be possible at that time. So either because of less tax paid by the producers or more ITC claimed, government expected that there will be a reduction in the prices. But to make sure that the final benefit is actually passed on by that producer to the consumers, how do I make sure that that benefit has been passed on? It was possible only through some authority which will keep an eye on the producers whether they have really passed on the benefit or not. So the power is given under section 171, anti-profiteering measure. So as you can see this, to keep a check on the suppliers, it was necessary to see whether or not such fall in prices have been transferred, and thus anti-profiteering measures were incorporated under GST laws. Just to keep a check on the suppliers, it was necessary to have anti-profiteering measures. Let me discuss now in detail this section 171. I hope the basic of anti-profiteering is clear. So what are the provisions relating to this anti-profiteering? First, passing the benefit to the recipient. It is the main purpose basically, that actual fall in prices have been passed on to the consumers, and actual fall in prices is not kept by the producer, so that producers simply keep on increasing their profit. The intention is that you pass on the benefit to the final consumer. Second, there will be authority, national NAPA, National Anti-Profiteering Authority. It will examine whether benefit has actually been passed on or not. The government was authorized that through notification they can either empower any existing authority, or they can form a new authority which will deal with, or which will examine the issues whether the producer has actually passed on the benefit to the consumer or not. Third, in case the benefit is not passed on to the consumer by the producer, this authority will impose some penalty also. These are the broad purposes of anti-profiteering measure. So next concept, which authority was that? NAPA, National Anti-Profiteering Authority. So constitution, how that, or who will be the members of this authority? The chairman, who must be equivalent to the secretary to the government. Secretary to the government is the very senior post normally hold by a senior bureaucrat and IAS officer. So the chairman should not be of any rank below the rank of the secretary, and there will be 4 technical members who are having special knowledge of taxation. That means 4 members, commissioners of central tax or state tax, who have been the commissioner for at least 1 year. This is the composition of NAPA. Now it is for this authority to decide the methodology and procedure, that how they will actually check whether some reduction in prices have been there in the product or not, because company may give different methodology. The authorities may give different methodology. As a tax expert, I may give different methodology. So this authority was given the power that you determine yourself what should be the logical and rational procedure to check actual reduction in prices. And what are the duties of this authority? First duty, check whether really the reduction in tax rate or benefit of input tax credit has been passed on to the final consumer or not. This is my first duty as an authority member. Second, if not passed, then this authority was given the power to identify the person responsible for not passing this benefit so that that person can be penalized. Third, this authority can give different orders. Orders related to what? This authority can pass an order to any producer that you reduce the prices. So this authority has power to give orders related to reduction in prices, return to the recipient the valid amount or eligible amount. This authority has power to give orders imposing the penalty, and this authority can even cancel the registration of the producer. This authority has so many powers at that time. And this authority has a duty also that this authority was to furnish or file a performance report to the GST Council by the 10th day of the close of each quarter, so that the GST Council can check whether this authority is doing actually some job or no. These are the provisions of this authority, duties of the authority. Now, next topic, tenure of the authority. Not next topic, next point, tenure of this authority. This authority was basically given 4 years time limit, and after 4 years, it will cease to exist, because it was expected that in 4 years the reduction in prices or ITC etc. will be automatically adjusted. That's it. So my topic, anti-profiteering measure, is over. Any doubt in this topic, you please tell me so that I can start with the next topic. This topic is over, anti-profiteering measure. Any doubt? Kindly reply through chat window. Shall I proceed? Okay, now next concept. So I have covered 2 topics of unit 5. Now third topic is e-way bills. So let me share with you, so let me discuss with you e-way bills. So let me share the concept of e-way bills. Section 68, it deals with e-way bill. So first let me show you the original CGST Act. Before starting discussion on e-way bills, you always must know the original sections, because in courts or at higher level, books will not help. Original act and court cases helps. This is what the legal language. So you must be having the habit of first always checking the original source for everything. So let me discuss this original section 68 of the CGST Act. So let me share with you a new screen, original act. Can you see this original act? I hope this screen is visible. It's only one section, section 68. I hope you can see this screen. And what is the heading of this section 68? Inspection of goods in movement. So you must know from where this e-way bills. So what is the need of these e-way bills, or under which section they are deriving the powers? E-way bills. As the name suggests, e-way bill, electronic bill, online bill. And when it is required, when goods are moved from one place to another, any officer can check the bill. Suppose goods are loaded. Suppose any furniture is supplied from Delhi to Maharashtra in any truck. So anywhere at any place, the officer can intercept this truck and check the bill that which goods you are moving. So how they will check? They will check it through bill. and this bill is known as e-way bill. It is not manual bill, it is e-way bill, because everything will be linked on internet, so anyone can check the authenticity. This is the main purpose of e-way bill. It's nothing, it's like original invoice, but now these are electronic invoices, that's it. So it derives power through section 68 of the CGST Act. Heading of section 68 is inspection of goods in movement. When goods are not in movement, when goods are at any fixed place, for example, uh, in any washing machine showroom, washing machines are at fixed place in that showroom, so there is no need of an e-way bill. Original bill will do the job. E-way bill are only when goods are in movement, that's it. So it's only a 3-line section. So let me show you now section 68 in my simplified language. This is section 68. I hope you can see this new screen in Word format. Can you see this new screen? Is it visible to you? Is it visible to you, the new screen? Okay. Now see this e-way bill. Inspection of goods in movement, section 68. I can use the term for inspection of goods in movement oblique e-way bill, so that you know that section 68 gives the power for e-way bills. Now there are 2 points to make. First, any person who is moving the goods, like any truck driver who is moving the goods from one place to another, must be having the required documents with him, so that anytime when your truck is intercepted by the officer of GST department, you should be in a position to show the bill. So Act requires the person in charge of a conveyance carrying any consignment of goods of value exceeding some amount. So government will tell you some amount, that if your value of goods exceeds this much amount, for example, only then you are supposed to carry a bill. If you are not carrying the bill, that means there is some problem. Why you are moving the goods from one place to another? So it is necessary and compulsory for every person, when the goods are moved from one place to another, and if the value is more than 50,000 rupees, I will show you to it later on, but you must remember that if the consignment value is more than 50,000 rupees, the truck driver or the person who is moving the goods must be having the bills. Second, whenever that truck or that goods are intercepted by the officer of the GST department, it is the obligation of the truck driver to show those bills to the GST department. Whenever any conveyance is intercepted by officer at any place, he can ask that person in charge of the conveyance to show the bills. And this truck driver is liable to produce the documents so that authenticity can be checked. This is section 68. Now let me tell you in detail e-way bill. That what is that bill which this truck driver will show? Those are not manual bills nowadays. Those are electronic bills, e-way bills. So this e-way bill form, it is known as form GST EWB01. Form GST EWB means e-way bill, number is 01. It has 2 parts, part A, part B. Part A will be having the details of the supplier selling the goods, and part B is having the details of the transporter who is transporting the goods. Now some relevant provisions of e-way bills. So heading. Now it is you should cover this topic for 5 to 7 marks only. That's it. Theory question. Information to be furnished prior to commencement. So before starting moving the goods, it is necessary to generate the e-way bill. And this is the point, that if the value exceeds 50,000 rupees, if the value exceeds 50,000 rupees, then before commencing the movement, the supplier must fill the information in part A of the e-way bill 01. I told you that EWB01 has two parts, part A, part B. Part A is requiring the information of supplier, part B is requiring the information of the transporter. So before moving the goods, if the value of goods which are to be moved exceeds 50,000 rupees, supplier's information is necessary to be filled in part A of EWB01. That's it. This much is sufficient. Next point. So other things are written, there is no need to read those other things. You can skip these things. I will tell you which items you have to do. Validity period is the next concept. Any e-way bill which is generated is valid for how many days? So it is what the point is. Up to 20 kilometer. So one e-way bill which is generated. After generating the bill, the truck can move. The conveyance can move for 20 kilometer because it is the limit. Moving 1 day. In 1 day, after generating the bill, you have to move your truck at least for 20 kilometers, or not at least, up to 20 kilometers. In which cases, ODC, over dimensional cargo, which are very heavy cargoes, you can see so many trucks moving, which moves at slow pace because those are heavily loaded. Empty truck can run fast, can cover the distance fast, but fully loaded truck, heavy big containers or carrying big machineries, those are known as over dimensional cargo. Those moves at slow speed. When Delhi metro coaches come to Delhi from any port, they move at very slow speed, having 64 or 70 tires in that truck, which are required to move one coach of Delhi metro. So these are over dimensional cargo where the speed is very less. So one e-way bill, if generated to move that consignment, then validity period is 20 kilometers. And then for every 20 kilometer or part thereof, additional day. This is the validity period. These validity period make sure that goods are moved fast so that trucks do not remain idle at any point of time. The drivers, that means, will not waste their time on the road. It will ensure that the goods are supplied without wastage of time. Up to 100 kilometer, if it is if it is not over dimensional cargo. So 1 day 100 kilometer, empty trucks or light trucks, they have been given the validity period of 1 day to cover a distance of 100 kilometers, and then for every 100 kilometer, additional 1 day. So my first 2 points are basically for over dimensional cargoes, heavy loaded trucks, and my other 2 points are related to not heavy loaded trucks, which are not over dimensional cargoes. For over dimensional, 20 kilometer, 1 day. For not over dimensional cargoes, 100 kilometer 1 day. It is the validity period. You are supposed to learn the validity period. And what is relevant? What is relevant is this point is relevant. Validity period from the relevant date. So what is this relevant date? If suppose today is the date today is क्या date है आज? लॉकडाउन में डेट याद नहीं रहती. What is the date today? Can you tell me the date? 15 जून. आजकल सारी डेट कुछ पता ही नहीं रहता डेट क्या है या दिन क्या है. सब दिन संडे ही है. Okay, now if on 15th June, suppose today I generated the e-way bill at 3:34 p.m. Suppose on 15th June, as a supplier, my consignment of washing machines are required to be moved from Delhi to Mumbai, and suppose I generated e-way bill today. So the question arises: 1 day will start from today 3:34 p.m. or when? It is a technical point. So government says that your 1 day starts from midnight. This is the point which you should remember. Relevant date shall mean the date on which e-way bill has been generated. That means today is the relevant date, 15th June, and the period of validity shall be counted from the time at which e-way bill has been generated. So validity period shall be counted from today 3:34 p.m. and each day shall be counted as the period expiring at midnight of the day immediately following the date of generation of e-way bill. So can you understand this point now? That my e-way bill which I have generated on 15th June 3:35 p.m. will not be expired tomorrow at 3:35. It will expire tomorrow at 12 night. Is the concept clear? You can read these 4 lines and you can ask me the doubt. That means my first day can be even more than 24 hours. If today I have generated the e-way bill in the morning 9 a.m., my one day will lapse tomorrow 12 night. If I generated my e-way bill today at 11 p.m., it will lapse tomorrow at 12 night. This is the point. Read it and you ask me the doubt if you have not understood that how these 24 hours will be counted. It is a relevant point. Recently, I have given an exam to appear in some GST course, and this question was asked in that exam. So if you have any doubt, you ask. I cleared that exam. Any doubt in understanding that how you will count 24 hours? If today I generated the e-way bill, then my first day will lapse tomorrow 12 night. This is the point. Any problem you ask. I'm waiting for your reply so that I can proceed forward. I can proceed further. Kindly read these 4 lines and give me your consent to move forward. So one question is how it could be more than 24 hours. If today on 15th June at 4 p.m. I generated the e-way bill, if I take 24 hours, logically it should lapse tomorrow at 4 p.m. But it will not lapse tomorrow at 4 p.m. It will lapse tomorrow at 12 night. So by default, it is more than 24 hours. I hope the doubt is clear. Give me your consent to move forward. One doubt is if bill is generated at 1 a.m. on 16th June, then it will expire at 16th night or 17th June night. Can anyone tell me the answer? If bill is generated today morning at 1 a.m., then it will lapse today night 12 or tomorrow night 12. Tomorrow night 12, yes, obviously. So in this case, I will get 47 hours by default to move my goods. Yes, so let us proceed. But sometimes it's not possible. Maybe my truck got some problem, or it is possible that I cannot cover the distance of 100 km or 20 km as the case may be in one day. So government says extension of validity is also possible. Commissioner can also extend the validity, or your transporter can also extend the validity. And the times to extend the validity is within 8 hours from the time of expiry. You should fill the form or correct the form, rectify the part B information of transporter, and you can increase the validity of your e-way bill. That's it. Next point. In some cases, you are not supposed to get any e-way bill and still you can move your goods from one place to another. So there is no requirement of e-way bill in the following cases. So you are supposed to learn only 5 to 7 such cases. Like LPG. We use cooking gas at our home or at commercial places also. Those trucks which are carrying gas cylinders, they are not supposed to get their e-way bill. Their normal bill is sufficient. No need to generate e-way bill when goods are moved, and goods is LPG. Kerosene oil under public distribution system at ration shops, at slums, or at any lower income class areas, you have ration shops where kerosene oil is sold at subsidized price. Moving kerosene oil in such situations doesn't require the e-way bill. Postal baggage by Department of Post. Department of Post doesn't require e-way bill to move the goods. Currency. Currency is moved from one place to another in ATMs, from bank to ATMs, from RBI to banks, etc. No e-way bill is required. Personal and household items. If someone lives on rent, so many times if someone lives on rent, they move their goods from one place to another. The value of goods is much more than 50,000 rupees. E-way bill is not required. Next point. When goods is transported by a non-motorized conveyance, non-motorized conveyance means not using these petrol, etc., like rickshaw, e-rickshaws, etc. E-rickshaw, I need to check whether it is treated as motorized or not. But cycle rickshaws, you move the goods from one place to another, even if the value exceeds 50,000 rupees, no e-way bill required. That's it. Mm, That's it. My e-way bill is over. Any doubt, you please ask me. My e-way bill is also over. Any doubt? Shall I proceed? Hurry up. Shall I proceed? Any doubt in e-way bill? Okay, next topic within unit 5 is zero rated supply. Zero rated supply. Do you remember zero rated supply? Zero rated supply is given under section 16 of the IGST, and we have already covered it initially in the chapter supply. Zero rated means all exports are zero rated, where the tax rate is zero. All exports are zero rated. All supplies to special economic zones within India are zero rated. I've already covered it in detail in the chapter supply. It is section 16 of the IGST. So I'm assuming that zero rated supply is also covered. So not assuming, in fact, it is covered. So I have covered 4 topics of unit 5. So let me record this class. Let me come back after 5 to 10 minutes. The time is going to be over. 40 minutes limit of this Zoom is going to be over soon. And then we will start another topic, appeal. So let me come back after 10 minutes.